Hi, everyone. I'm Dr. Aisha Khanna, and I am so pleased to be here for this session by Park Launch on crypto in Southeast Asia and Pakistan. And I'm delighted to have a fellow Singaporean who will be the star of the show and will be talking about this topic, Hassan Ahmed. So Hassan is head of Southeast Asia at Coinbase. He is highly experienced fintech strategist in venture-backed startups, and he has a deep interest in payments and crypto. He completed his MBA from Harvard Business School in 2011, and I'm going to ask him a couple of questions, including, Hassan, tell us about your journey from where you started to, how you got interested in this area and how you are now in Singapore with Coinbase.
Sure. Thank you, Dr. Aisha Khanna. Pleasure to be speaking with you today. And thank you to the folks who are dialing in and take time out of their Sunday for this session. So I'm in Singapore right now. Moved here with my family about 2 years ago. I think some of the relevant portions of my career and background, especially to this session into crypto, really going to start back in my undergrad days. So I was a major in math and finance with a minor in comp sci. And at that time, I didn't really know what I wanted to do, but my honors thesis in math was in elliptic curve cryptography. And it was just something I thought was cool at the time. And I just sort of studied it and just threw it aside. And then I went into consulting because that's what one does when one doesn't know what one wants to do. So I did some tours of duty in management consulting and investment banking, private equity, and the like, and then sort of did my stopover for my MBA. But I just never really quite grokked sort of what I was doing, and really wanted to kind of when I really thought about it, that was not the ladder I was wanting to climb. And so I switched over to fintech and joined a company called Venmo, which is a social payments app in the US that had been acquired by PayPal. And in parallel, by the time that I joined there, in 2013, I read the Bitcoin white paper. That was the first time that I got to know about crypto. Now, I had sort of just kind of pivoted my career towards fintech and payments. And so I wanted to obviously kind of make a go of that. And, I had a wonderful experience there. And I learned a ton about fintech and, building on top of legacy banking systems and, regulated spaces, all that. But then this whole notion of cryptocurrency and Bitcoin, after reading it, it was like just this mind virus. Like once that idea just sat in my head, I just couldn't let it go. And so for years and years, on nights and weekends, I was just a hobbyist, a trader, investor, and I was just following it. If for many of you or some of you who maybe have been in this space a little earlier too, you might recall that the beginnings of cryptocurrency are maybe not that above board and hygienic. Like most of sort of the use cases or like what was talked about at that time was a gray market called Silk Road. And so it wasn't really something you brought up in polite conversations or anything like that. So it took me years, I guess, to really get conviction that, hey, what, blockchain and crypto are like an asset class and a technology that are durable and here to stay. And maybe this might be as big as people are claiming on these message boards. So finally decided to just change my career direction and move into crypto full time. So I joined a company called eToro that was wanting to launch a trading platform in the US, and they wanted to go crypto first. So I had the opportunity to build up a crypto brokerage with them, and then sort of subsequently moved over to Singapore and Southeast Asia, and we'll get into that. But eventually just, got a bunch of experiences along the way that allowed me to be here where I am today.
And Hassan, that's so interesting because I know so many people who started just like you and then they just get hooked. And I myself, started recently because I do a lot more on artificial intelligence and it's fascinating. And I actually see a great synergy between the two. But let's step back. Let's just go to why is blockchain and crypto interesting? Let's just start with 101 a little bit for anybody in our audience who's kind of just thinking about it and wants to know what's the big picture, what is different about this?
Sure. So there has been a lot of digital ink that's been spilled on this topic over the years. I'll give you my kind of point of view and my synthesis of it. So I think initially, what really what the Bitcoin white paper and what Satoshi Nakamoto really sort of solved was this notion of ensuring trust in a trustless environment. And there's this mathematical problem called the Byzantine generals problem that sort of he uses as an example to sort of apply towards this. But what sort of is really kind of happening in a sense is that there's a lot of different disciplines and domains that are coming together to solve this problem in a novel way. In a sense, he or she or they didn't really invent a new technology. They brought together existing technologies in a novel way that allowed this problem to get solved. And so there's fields around networking and distributed computing and economics and philosophy and finance. So it's a little bit like an elephant, like it depends on what side of it you're touching. But the reason why it's sort of interesting is because it sort of introduces this notion of trust as a primitive. And once you can bake trust natively into the internet, you're sort of moving from the internet of data to the internet of value. And that's sort of an overlay on top of everything else that we've built today. So I think that's what's really cool about what this technology is, that because you don't need to trust a central party, you can be decentralized. Because you can be decentralized, anyone can participate. Because anyone can participate, it's this Cambrian explosion of experimentation and just all sorts of funky things that are happening at a grassroots level. You can also, there's also this fusing between, I guess, what you would call like the networking and data layer and the value layer. And we'll get into capital formation and how that happens in blockchains. But that, I think, is also why people are just so obsessed with it, because from a finance perspective, you can really just make anything liquid and tradable and assign a value to it without being permissioned into the system.
So Hassan, by the way, I love the way you described it. I find this whole culture of Web3 is full of people who are really smart and technical, but also very philosophical. And that reminds me of, when the internet first came out, which is Web 1. So if I was to kind of say, what is Web 1, Web 2, Web 3, people are just throwing this out. Could you kind of give us some idea of what's the difference between the three, and what's the difference between blockchain and crypto?
Sure. So my kind of non-technical take on Web 1, 2, 3 is that Web 1 was sort of really when you originally started this interoperable internet. And when it was sort of, when this communication layer really started coming into being, it was, in many ways, it was very P2P. And when you went online, you didn't really find anyone unless you knew who you were maybe looking for. You actually called up your friend and said, hey, why don't you come online and we'll chat? And so, that's sort of where the Web 1 days were. Web 2, I think, is really sort of defined by, the FANG era, where, you sort of got into the state of the internet where it had matured to a point where there was just these gargantuan centralized entities that are really at sort of, it feels like insurmountable scale. But one of the kind of hallmarks of this is that they're also extracting a lot of value out of the ecosystem because they're such kind of entrenched incumbents in the space. And so Web3 sort of goes back to the internet's original roots a little bit. It allows for P2P designs to become vibrant and native again. But what's different also now is that the ownership and value is sort of going back out to the nodes, which is sort of us in a sense. And so that's what the promise of Web3 really is, that you can be decentralized and you can sort of, have these one-on-one interactions again through, what's called smart contracts and whatnot. And you don't necessarily need a central intermediary. Now that's the promise. We can talk more about where we are with it, but that's how I think Web3 is different from Web 2.
I mean, certainly that's the reason it's so attractive to me, because I remember when I came to college to America, that was way before you, we were exposed to Web 1, and the whole idea that the internet was supposed to democratize access and set us free and make everybody on an equal footing was so attractive to me, coming from Pakistan especially, where there's so much inequity and injustice at times, that is what is really attractive about Web3. Not only that it lets developers and producers take part in it, but also creators, individual creators can also benefit. Okay, so now let's move on to kind of your observations in this crypto blockchain kind of scene in Southeast Asia. what's happening, what are the trends that you're seeing, and then after that, let's zoom into Pakistan. But let's start with a bigger Asian kind of landscape.
Sure. So I think before we even sort of talk about maybe the geographical aspects of it, let's just talk a little bit about where we are in crypto today, and then we can talk about some of the Southeast Asia market dynamics. So today, one of the most important functions of the industry, crypto industry overall today, is allowing users to convert their fiat currency into cryptocurrency. So think of it like being a bridge between what you would call the traditional economy and the crypto economy. Overall, like estimates for global estimates are that we're still about somewhere between 300 to 500 million users for crypto. So it's over like a 12-year period. So it's not nothing, but we're still in that kind of early adopter stage. We still haven't like gone across the chasm on a like mass adoption as yet. So we're still early is sort of the takeaway there. And so as a result of it, a lot of the action that you'll see in the crypto industry is still around what I would call like crypto exchanges and crypto brokerages. And there again, their primary sort of jobs to be done is they just help you buy and sell cryptocurrency, i.e. convert your fiat local currency into crypto. Okay, so for Southeast Asia, Southeast Asia, and just to kind of define it a little bit. So the way I think about it is really the ASEAN countries. So that's Indonesia, Philippines, Vietnam, Malaysia, Thailand, and Singapore. That's a population of about, I think, 650 to 700 million people. And of course, different countries, they all have their different cultures and sort of, where they are and their tech ecosystems and whatnot. But across the board, except for Singapore, let's just say that they're kind of these ascending markets or developing markets. But across the board, the adoption rates are still very, very nascent. To give you an example, Philippines, which I actually consider the most advanced crypto emerging market in the world, has 100 million population, 60 million e-money users, and about 7 to 8 million crypto users. And let me just sort of double click on the kind of e-money part a little bit, because it's a very important heuristic on adoption that I think about. So for e-money and digital wallets, as when we're seeing Pakistan kind of take off on that as well, the reason why it's an important heuristic for crypto adoption is because in order to use a digital wallet, you have to download an app, you have to pass KYC, you have to attach a funding method, and you have to top up your account. So once you've gone through that entire kind of user journey, to go from, I guess, what I would call digital wallets to digital currency is not that big of a leap for whenever you're ready to do it. Because you have to remember that crypto is not just for speculation, buying and selling, it's also for use cases around cross-border payments or commerce, or there's a whole bunch of other things as well. So my expectation is that over time, like these countries will sort of meet or like exceed the e-money adoption rates that they have today. Indonesia has 270 million users, about 210 million smartphone users, about 160 million e-money users, and only 8 million crypto users as well. So that just goes to show the amount of headroom and kind of adoption potential that all of these markets have. Now, let's talk about regulation for a second, because I think it's hard to talk about crypto as a business and not talk about regulation. So for any emerging technology, and actually I have experience in this on the AI side too, policymakers in general, like they have to kind of wrangle with this new technology, right? And how it sort of fits into these existing frameworks, or whether they need to modify it. But the objectives around, it might be around like consumer protection or data privacy or financial protection or investor protection. And they have certain mechanisms around like transparency and licensing and capital requirements and things like that. So they have all these tools and levers that they can pull, and they have to make these decisions about like, do we want to regulate this industry maybe now, or just let it run amok and then we figure it out later. So within Southeast Asia as well, like different regulators are at different parts of the spectrum in terms of being crypto friendly to agnostic to straight out hostile. So I'd say that Philippines is probably the friendliest. They had a crypto licensing framework since 2017. Singapore is probably up there too. We're sort of on the verge of having a licensing regime kind of ready and up and running as well. Indonesia went from hostile to agnostic to friendly in the last year. So they're about to release their own licensing framework. And I'd say Malaysia and Vietnam are still somewhat kind of on the antagonistic scale. And that shows up in the adoption numbers and sort of the potential as well, because once capital allocators and industry members know that, hey, look, I have certainty around operating a business here and serving the local market, then you can actually start making investments and you can start going in deep. So at Coinbase, that's a lot of what I think about. In Singapore, we've made this our kind of regional hub. Singapore's always had it's been pretty kind of pro-business, and now they've sort of built up a licensing regime as well. So we know that we can kind of operate here for the next, X many years. Philippines, again, I'm very, very bullish on, and we're going to try to enter there. Indonesia is also very interesting. Thailand, I think, is good too, but Vietnam, Malaysia, we're going to play out the situation and see. So overall, I think there's many monster businesses to be built in all of these markets. Obviously, the tech ecosystems are also an important component. So Indonesia already has this flourishing ecosystem, and that really helps when you want to make investments. Philippines, interestingly, is a laggard in everything else versus Indonesia, but when it comes to crypto, they're much further ahead. And I think there's some direct lessons that we can kind of take to Pakistan if that's where you want to take this.
Well, I just wanted to step back before we go to Pakistan, because what about then if I was to look at China and India before we go to Pakistan? Because
Sure.
we want to kind of look these two countries, we kind of keep an eye on a lot more than necessarily ASEAN, although I now see the tech sector in Pakistan is really looking at Indonesia, which I think is a great kind of forerunner to what we can expect in Pakistan.
Sure. Yeah, so India's a fun one because for folks that follow this industry, India RBI had been vehemently anti-crypto for years and years. And if you had seen maybe just recent announcements, India is actually moving towards regulating crypto locally. And that has been a huge sort of turnaround and change in sentiment and a move by their government to, in some ways, kind of accept that crypto assets and virtual currency is here to stay. Their consumers and citizens are buying it anyway. India does have one of the highest actually adoption rates across the world as well. So at some point, I guess the equation just flips to, look, it's better for us to protect our consumers and to start collecting tax as opposed to letting these unregulated global crypto exchanges just service them cross-border. So that's huge. China, on the other hand, actually has gone in the other direction. Overall, very, very sort of negative sentiment from a kind of central policy perspective about the level and sort of engagement that they want kind of open cryptocurrencies to play. I think they're very bullish on central bank issue digital currencies, which kind of is fairly consistent with the theme of sort of national surveillance and just having a kind of a top-down approach. But crypto mining, crypto exchanges, brokerages, they're pretty much all skipped down out of China at this point.
I think that's really interesting. I didn't realize this about India because I know they had been conservative for a long time. And for China, it may just be that they are trying to reset the technology sector's hold on the data and the habits of and this income disparity that they're seeing. But I think that they're quite progressive in general, will likely probably pivot back. But I've been impressed by some of the constraints that they have placed on some of the tech industry, especially related to children, even fintech, because these things can get out of hand. And as you said, regulation is so important to this. And it was kind of a big Wild West. But I do think that China would inevitably join beyond the central currency as well. So now let's go to Pakistan, basically. What's the opportunity in Pakistan? Fintech is exploding, great startups, our talent is phenomenal. What's the opportunity there? Where do you think, are there startups? I mean, even I want to know, Kalsoom and I actually went and started to try and look for women in crypto in Pakistan. So anything that you have observations or who are the players and what do you think about what's going to happen there?
Yes, let's talk about Pakistan. So first of all, I think it's important to recognize for that the Pakistani startup ecosystem is at this massive inflection point. It feels like. I think for many of the folks in this audience, and Kulsum from I2I, as you mentioned, yourself, people that have really been instrumental in sort of building up the ecosystem, almost sort of brick by brick, had been waiting, for years and years for like, hey, when are like the investor floodgates going to open? When are we going to see sort of the next gen of entrepreneurs not going to post Kareem in a way, starting to kind of seed, and when is risk capital going to come in a material way? Not to jinx it, but it feels like 2021, is the year. Like when you look at like, total funds raised, it's multiples of kind of what, the past years look like cumulatively. So I think it's a very, very exciting time overall. And fintech, like you mentioned, like is also just sort of seeing kind of that like, escape velocity. A lot of times, like some of the patterns that happen are like e-commerce goes first. And then once enough people start transacting online, cash on delivery is sort of insecure on some levels. And once, especially kind of when licenses and e-money licensing gets formalized, that's sort of when like fintech and starting with payments starts to take off. And so I do think it's very, very exciting to see how that's kind of developing. Now for crypto in particular, as I mentioned, for these other markets in general, like, e-money had already been kind of fairly far ahead, especially kind of where Pakistan is today. And then crypto kind of followed suit. I don't think that we necessarily need to wait for that pattern to evolve. In many ways, I think startup building as a playbook is much well understood by kind of entrepreneurs in our markets and in Pakistan as well. And so you can just take a lot of those kind of, basic building blocks and get started, and there's just much more expertise to tap into as well. So again, step one of a crypto industry is having a crypto brokerage or a crypto exchange that can help you convert your local currency into crypto. Today, the most sort of prevalent method of how this is happening is through a kind of a P2P unregulated marketplace that a global exchange is offering. And it's just there's so much demand for it. Like people are figuring out ways to do it. Like deals happen over WhatsApp as well in like this over-the-counter manner. But if you really want to scale it and if you want to do it the right way, we need a crypto brokerage. And so there's obviously a lot of kind of policy and regulatory engagement that's needed. There's some education that's required as well. But my counterpoint to this line of argument that I hear a lot is, hey, but crypto's banned in Pakistan, or crypto's not regulated in Pakistan. First of all, like crypto's not banned in Pakistan. There's certain uses of crypto that are not allowed, which is that you can't use it as a means of payment or like a currency. But you can hold crypto, you can stake it, you can use it in DeFi, you can mine it. In KPK, for example, I think that they're much more progressive. I think that if you look at like Vietnam or Turkey or Brazil or even India until recently, even when the regulations were not clear, they were brave entrepreneurs that were able to set up crypto exchanges and be off to the races. Like WazirX in India now is worth about like 2.5 billion. CoinDCX is north of $1 billion as well. Turkey has a BTC Turk, which is sort of getting there. Indonesia had Indodax before regulations came in, which is a unicorn as well. So my point is that, frankly, like if somebody were wanting to really kind of pick this up, and I'm happy to kind of help in whichever way I can, there is literally $1 billion opportunity in wait. Pakistan is the only country in the top 10 most populous list that does not have any functioning crypto brokerage today locally. So that I think is the big one for all of us to kind of consider.
That is very exciting. But now let's, one of the things is let's go to some applications beyond kind of the crypto exchanges. And one of the big things is this idea of gaming or just play to earn or right to earn or anything to earn, right? Can you explain this concept a little bit, and then kind of what is the opportunity here? And why is everybody so excited about it?
Sure. So let me, I'll explain the concept very quickly, and I'll touch on a little bit of what my personal experience with it has been and why I'm also very, very bullish and excited about this. So in a nutshell, like as the phrase suggests, play to earn means you play this game and you earn as a result of it. Now, this is happening in crypto with a particular game called Axie Infinity, which kind of has sort of taken the crypto world by storm.
Right.
They have 2 million daily active users, and their governance token, which is called AXS, this year alone, year to date, is up 230x. So it's just sort of to say that they have found product market fit with this game in a way that people have been experimenting with, but they were the first ones to break out. Now, why play to earn? Why now? Why crypto? Why is crypto enabling this? So there's this other primitive within crypto called NFTs, which are also really important because that's also part of the zeitgeist these days. So NFTs just mean non-fungible tokens, and the way to think about it is that currency is fungible in the sense of this 100 rupee note is the same as that 100 rupee note, and it should be, because that's what makes currency useful. But most real world assets are not fungible, right? Like even like, let's say the car that you bought once you take it off the lot should not be the same as like the next kind of car that rolls off that lot. So non-fungible tokens are basically representations of digital assets that can be provably owned and and verified that, hey, you own this NFT. NFTs have a variety of different use cases that can be just art. They can be ways to kind of get access to a community. They can have certain utility baked into it as well. And they are also being used in blockchain games. So my sister who's in the audience used to work at Zynga, for example, right? So for some of you maybe that remember Farmville, if you really got into it, think about like the hundreds of hours you might have put into Farmville, or maybe even like all these kind of skins or things that you might have bought in Farmville to kind of help you with the game. Now, what if that was actually sweat equity that you were contributing to that game and to that ecosystem? And what if you could take whatever assets that you either acquired within that game or you earned through that game, and you could take it anywhere that you wanted? And that's basically what this concept is, that you play, in this case, you play a game, but you are actually a user owner of that game. And you earn as a result of it because that's how the smart contract is set up. But because, again, crypto is immediately liquid and it's open sourced, that token has a value because the market says that it is a value. All right, so now that this is all like a little theoretical, right? So let me just get more concrete about this. So one of my experiences with that was that I was running a brokerage, crypto brokerage in the Philippines. And just, happenstance, but I got exposed to blockchain gaming and play to earn as a result of that. And I literally saw like, my employees, like their family members who were playing, like they ended up like being able to buy actual land or actual houses off of just sort of, playing this game. And it was because, again, like there was a run up in token prices as well, but they were able to actually, instead of playing Animal Crossing or PUBG or Dota or whatever, they were like, look, I'm going to make my time productive, even if I want to use it for, have entertainment as my utility, but I'm still going to get something back for it. So that's really this play to earn concept.
But Hassan, who's paying? Is it the game that's paying? Is it funded through VC money, or are players paying each other? Just where's the money coming from? Okay,
so this is a great question, because a lot of people like ask like, hey, where does crypto get its value from? And why if I issue this token, like why does it have value? Like this just seems weird.
Yeah.
So what I would challenge folks in this audience is to think about capital formation. Okay, there's actually, unless you go through this experience of maybe starting a startup and inventing equity out of thin air, so to speak, until like someone assigns value to that equity. That's basically what is happening. That when you, like, let's say you have an idea for a protocol or an application that's crypto native, and you want to issue a token against it, in some ways you've basically sort of issued some level of claims or ownership against that protocol, and you can design however. But because it's a global liquid 24/7 market, the kind of like hyper capitalization that can occur frankly is extreme, and sometimes it really gets ahead of itself. But what happens is that basically it has value because people say that it has value, and so that's sort of where a lot of like the immediate liquidity and value against that token comes from. Now, because it's so kind of hyper turned on, it does happen more often than not. I'd say that basically the financial value gets ahead of the utility value, and then there's some sort of a reset. It could be some sort of a drawdown, or if, let's say the project goes up or something, then it can go to zero as well. But a lot of times for high quality teams that actually are committed to sort of building out, what you'll see is there will be some sort of an initial run up, and then there will be a sort of, like, because they can like live up to the hype, then there will be some sort of a drawdown. But these teams will keep building.
And Amazon is 60 times,
it will
66
look
times
up,
earnings.
and come bigger than before. So it's all to say that these dynamics are very kind of equity-like and capital formation-like in that sense.
Okay, that has been extremely helpful, I think, because this idea of, where's the money coming from is, I think, is something that I hear quite a bit. Now, NFTs in general, there's such a buzzword, but I mean, people are even selling real estate, and even though metaverse is not part of this, but I would love to know kind of what is up with this real estate. And do you think that, because we love real estate in Pakistan, because anybody now, our economy is maturing, but that's a very traditional way of investing. And why has that become so, and do you think that's a viable investment, basically?
Oh, so something I should have said right at the beginning of this is that nothing I'm saying construes any kind of financial advice, by the way. So please do not hold me to any of this. But so this is what I'll say, right? Like, so on the metaverse front, I think the principles behind it are that, look, we are spending more and more of our time and our energy and our focus online and digitally, as opposed to what people call meat space, like physical world. And especially for like the kind of younger generation, I feel like on some levels, like the switch has already happened. Even my younger brother, like, he's met so many friends, like just, gaming together, and now they go hang out like in kind of real world, hangouts and stuff. So it was just not something that was like very native or comfortable for me, but this is sort of how things are happening. So if your digital identity and your digital presence are becoming more and more important over time, one, isn't it important for you to own it as opposed to a Facebook or a Twitter or someone else own it? That's, I think, step one. And then step two is, the way that we're interacting on social networks today is still very 2D, right? So a little bit of like, I guess even where like Mark Zuckerberg is taking Facebook is that recognition of like that next level of interaction is coming, but where kind of it hits the blockchain is that, again, like you want to be able to own your assets, you want to be able to own, said land, identity, other kinds of things that ought to have value, should not sit in some sort of a centralized repository that can like box you out anytime they want.
And so now it seems like, and so many Pakistanis, obviously with our high mobile penetration, are already online. So and more of these kind of startups are coming up, whether it's e-commerce or logistics or fintech or edtech or health tech. So exciting. But have you seen any startups related to crypto? You said crypto exchange is one thing, but is there a community brewing? Have you noticed anything like what's happening right now? Or if you haven't, that's cool as well. But just wanted to kind of get a sense. And the second question should be, where should somebody start? Like where should somebody start if they want to have a startup in this area or see how to incorporate it in a startup or company that they're already working in?
Sure. Yeah, no, I think there is actually a decent amount of startup energy towards crypto in Pakistan already. So I've been fortunate to get connected to some folks that are very early on in this space and are very committed to sort of building stuff out and either have kind of setups in Pakistan or sort of are doing stuff remotely. Some of the kind of big ones that come to mind are Stacks, which is started by a fellow Pakistani, Munib Ali, who's from LUMS. So LUMS, actually, there's a pretty big program at LUMS that he seeded up as well. So I would recommend anyone who wants to build to go, build on the Stacks ecosystem. I think it's fantastic. Then sort of GIEC is, doing some pretty cool stuff. So I think if Dr. Fat Khan is here, he's sort of spearheading some fun crypto initiatives over there. And GIEC is obviously kind of a big, pool for tech talent in general. And I'm hoping more and more folks will come over to crypto as well. And then there's just other folks that are, have like either had like general kind of, development houses that are doing some stuff in crypto or, are doing some sort of trading and market making as well. So I think it's there, it's happening in pockets a little bit. I do think that, again, like being able to sort of create a more fulsome ecosystem, we're just starting to kind of get started on that. Some of these kind of important nodes in our kind of tech ecosystem, such as universities or these accelerator systems and venture capital funds and whatnot. I think that there is need for coordinated action here.
No, I'm really glad to hear about the GIK and alums initiatives, because I think it's so important to be exposed to it at a place where you can kind of experiment and not be afraid to fail before you even go out for funding or do anything else. And Kalsoom put it on Twitter, and a number of girls I was mentioning reached out, and one of them was even mentioning how they're creating NFTs that represent empowered women in Pakistan. So I like the fact that I personally am a big proponent of more women in the tech sector, and I feel there's something about this which is empowering every individual creator, including maybe minorities and underrepresented Pakistanis, sometimes often in tech, like women. So what I'm going to do now is kind of open it up to questions. Ali, maybe you want to ask people if they want to. Guys, if you have any questions, please put it in chat. Otherwise, we'll just continue to have a discussion over here with Hassan.
We have some questions on the chat.
We do? Okay,
Yeah.
so I cannot see it. Hang on a second. Oh, here they are. Yeah, actually, there are quite a few questions. Oh, wow. Okay. Sorry, let me go all the way up. Zabardast. I have to put on my glasses for that. Okay. One person said crypto is a Gen Z thing. And is that true? Stocks don't attract youth as it's not controlled by uncles in Wall Street. Is that true? Do you think it's like people our age? It's more of a young person's thing?
I think that the fundamental attraction of crypto is that it is permissionless, and these are investment opportunities that can be availed by literally anyone. In 2015, if you were there, you could have just gone to Ethereum's webpage and participated in the ICO at like 10 cents per ETH, right? So, and many people did. And I think that there's this general sentiment that the stock market and many of these sort of kind of systems the scales are tipped in some ways. And so if you're not part of like that incumbency, you're sort of the exit liquidity for many of these folks. So I do think that on some level that sentiment is true and fair. And it's also because I think Gen Zs are just much more comfortable with like this concept of a native internet money. Like, of course, money should be native to the internet. Like, why are we trying to have this kind of beautiful like fintech front end, but then all the settlement is happening on these legacy banks where like the UX is just so awful. So I think there's a lot of truth to that.
We have some, Hassan, around, as you can see, around regulation as well. So one person asked, is there a risk for regulation? Basically, it gives you the opportunity, then it moves back. And then Asif Hussain is asking, while the SECP is looking at fractional ownership use cases, Pakistani policymakers would not realistically move towards crypto adoption until we get out of the FATF gray list. And considering it's made rules regarding digital assets as well, is there something stakeholders should be proactively doing to adopt guidelines from FATF to coincide with when Pakistan's get out of this gray list? Yeah, I think that's a good question.
Should I take Asif Hussain's one first?
Yeah, please, both of them. Yeah, please. Thank you.
Okay. Yeah, look, I'm happy to take sort of input from folks that are kind of plugged into the system as to where like the sentiment is and sort of where things are headed. Within every agency, every government body, there's also folks that are proponents of it versus others that are not. So I don't think it's also that monolithic either. I think the point around like the FATF gray list is fair. It does sort of create this sort of concern. But even FATF in general, sort of as an organizing body, has been providing a lot of guidance for how digital assets ought to be regulated and what sort of controls like these companies or vast virtual asset service providers need to have in order to be compliant. So I think just that reason alone isn't sort of an end all be all. I do think that there is opportunity in Pakistan for someone to kind of, be brave and sort of take that first step. I think capital controls probably still like remains one of the concerns. But again, like crypto is just a tool, right? It's not the only way that, leakage would happen. But it is something like in Vietnam or Thailand, for example, like this topic does come up quite a bit, but they've moved past it.
And what about Sebastian's question on, how do you mitigate regulatory risk? And does it make sense to build a regional or country-based guild like YGG for Pakistan?
Yeah, so great question. So two things. So this is why I'm so excited about like play to earn or, learn to earn or work to earn, I think where this eventually goes, because earning is upstream of financial services. And so, when you're helping people kind of trade time for money in a sense, that's much better than helping them, trade capital for capital, where like you're squarely like in the financial services side of it. And frankly, like most people, have a lot of like time they're willing to allocate, but they don't have a lot of capital to begin with. So if you want to actually sort of increase adoption, I think play to earn makes sense on a ton of levels. Now, the Venn diagram that I have in my head is that you have gig economy, gaming, and blockchain, and this is sort of what like play to earn like represents. So you really, I think, can take a gig economy lens to, especially the regulatory side of it. The contractor relationships and tax will be some aspects that we will need to think about. But I don't think it's, especially for the foreseeable future, it's not going to be sort of the financial services type regulations. Now, on the second part of this, this is also, I think, a very excellent point. So YGG, that stands for Yield Guild Games, is the market leader in play to earn. And it's a very kind of Filipino heavy and Filipino based outfit. And after observing them, and there's a guild in Indonesia that I'm advising as well, my sort of observation here is that these guilds are going to be heavily localized, because the user base that you're trying to attract, they really like, between the education and onboarding and community building, they will want to just interact with folks like them. So like any Discord server that we want to start, like it has to be Urdu first, and it has to be like, other Pakistanis like that love playing games and whatever, like that have to be there for the majority of it. So the mental model in my head is like, it's like the stairway to the metaverse, where like every big emerging markets is going to have 1 to 3 mega guilds. And then once they get to the quote unquote metaverse, then they're at this horizontal layer.
That's actually very helpful. I liked your Venn diagram. That sometimes it's helpful to have these big picture things. By the way, Umair says from Pakistan that he's already creating a play to earn blockchain. He's already, and it's raising money, and coin launch is around the corner. So that's exciting to see that in Pakistan. I don't know if Umair is in Pakistan or abroad, but anyway, great to see that. All right.
If you can hear me, I'm in Lahore, by the way. I'm not sure how the format works. I can fill you in, guys, for let's say a minute or two if you're up for it.
Yeah, that's fine, please. I mean, if that's okay with Hassan, yes, you give us like a 1 minute like thing. I think it's great to have this conversation.
Give us your elevator pitch, Umair.
We are already beyond that. So just to, I mean, for the benefit of everyone, because a lot of people are hearing. By the way, I'm Umair. I'm the founder and CEO of TechCell. We are a professional services company. So we were doing some time back a project for some, and I used to have a gaming company with the name of Nutty Apps quite a few years back. And we were doing this metaverse thing with another company called Terra Virtua, and we were building their metaverse. And they launched their coin sometime back and raised quite a bit of money on that. So I was talking to their founder and I said, like, we used to build games, you are in this. So how can we make it work so that we're just not your vendors, but your partners? Then together that aha moment came in when they said, how about launching this play to earn game? And we were looking at Axie Infinity. So we quickly thought about a game, and now we are building the very first part of it. It's called nitroleague.com. You can type in, and the website is just up. So we are great. We are beyond the white paper and all that stuff. We raised initial kind of $2 million for that. Quite a few. I mean, for general products, I've never seen a big VCs talking to us, but I mean, we spoke to Sequoia, we spoke to Woodstock, and a lot of these guys are, I mean, they're willing to fund this kind of initiatives. So the money is around the corner, but the problem that we are seeing is how to really incorporate it, how to bring that money. I mean, the regulatory stuff is a problem. So we are now creating a company in Dubai and creating a whole lot legal structure out of it. I mean, to make sure that things fall into place. But I'm still not sure of if we manage to make it reasonably big, how to really bring that money into Pakistan. So right now, what we are doing is that all the funding is even coming into our Dubai entity, and we are funding it, the Pakistani entity, which is actually making the game and everything.
So Umair, what I would say is that I think between Adifad and like the rest of the Spark Launch community, this is probably as good as you're going to get on helping you solve the issue that you're outlining.
Yeah.
Individually, I would also love to connect with you and just learn more. But sure. I would suggest let's move forward in the interest of time.
Yeah, sure.
Thank you.
All right. Okay. So I thought this was interesting from Mohammed Shamik. He's saying, when we say crypto enjoys its asset class status because the trust that can be placed on the blockchain and integrity, then why do we see regular instances of cryptocurrencies and other smart contracts getting hacked, exploited, losing millions? And where does one draw the line in terms of trusting something 99% of participants still don't understand how the mechanics of it works?
I think that's a wonderful question.
Yeah, that's a really good question.
So I think that one of the interesting and vexing dynamics of the crypto economy is that on one hand, we're trying to build a community and sort of user owners, and we're trying to sing Kumbaya on some level. But on the other hand, because of the amount of value that's circulating through, you really need to treat it as an adversarial environment. And part of the technical challenge here is that it's extremely difficult to quote unquote test before production. So if you know this developer like Andre Cronje, like this is his famous line, right? Like I test and prod, and it's because you can try to figure out like all the scenarios, but there's just, even if the code works, there's many economic exploits that can be sort of that can materialize. And so I think this is sort of what the kind of pattern has been of just releasing and learning. Unfortunately, the flip side of it is that not every team also is trying to sort of do the best that they can, or like invest in security as a first principle. And those teams and those projects, unfortunately, like sometimes the marketing can sort of get too ahead of itself, and then there's just too big of a honeypot for somebody to try to kind of come in and extract. So I think that's a little bit of sort of what is happening now. Can you make it safer through regulation and other instances? I think this is where it starts getting really tricky, because if you want to preserve the spirit of DeFi in this instance, you want to be able to let developers write their code and ship. If you start holding developers to some sort of a financial regulatory standard, I think you're going to stifle innovation, or they're just going to go anonymous, very quickly, and it's going to actually have, unintended consequences as a result of it. I do think that regulated entities, such as crypto brokerages, there was another hack today for $100 million for a crypto exchange. Those need to definitely be held to an extremely high standard, because again, they're regulated and they need to be kind of put to those same levels and same standards as other traditional financial companies are.
And by the way, we have a couple of other people, including Asim Ali, who also said they're facing the same problem like Umair did. They're developing games, integrating crypto and NFTs, but they have problems of bringing money to Pakistan. And I think this is a general question that the group can kind of talk about offline. But then there's another interesting question. I know hacking is one thing and scams, but kind of Mustafa Ali is saying, look, Hassan, I want to hear about kind of, is there a bearish scenario for crypto, Web3 in South Asia and globally as well? Like what's the downside, the risk? And I know for AI, there's always you have to mitigate all the downsides. There's always a bearish scenario. So what's that for crypto?
Look, I think that there's two big nightmare nuclear scenarios in my mind. One is just that all these kind of primitives or like, blockchains and smart contracts that like everything else is built on, there's some sort of a zero-day exploit that gets discovered, and the whole thing just comes down like a house of cards. Especially for the canonical blockchains like Bitcoin and Ethereum. I think if something kind of deep were to happen to them, I think it would call into question the entire industry, and I think it's possible that it just might like deal a death blow to the whole thing. Maybe they might figure out some way out of it. So sometimes like people talk about like, hey, well, could quantum computing, for example,
I was just going to say that exactly.
So it's been talked about, and the response is like it's a cat and mouse thing. Like somebody will break this, Ruby breaks SHA-256. Like, won't you go for the banks first? So there's that, and then the second, I think, more practical one, to be honest, is that we just never we don't like materialize the promise of crypto and blockchains, which is, I do think that there's a fair amount of speculation of like a future utopia. And I think if the use cases like don't come and actual utility does not get delivered, or to the level that people are expecting, I think this thing could bleed out on some level. Everything that I've seen in terms of developer enthusiasm and like new unexpected emergent use cases that actually have come that are now we're seeing sort of business models get unbundled and like rewrapped around Web3, suggests that actually so far that this bet has been correct. But again, I do think that's a pretty big existential risk for the whole industry.
Right. So guys, we just have time for 2 more questions. I'll pick 2 questions. Thank you so much. And I'm sorry if I didn't get to everybody's question. But one is from Fakhruddin, which I think is interesting, which he talks about central banks. And he said that many say that for crypto to become a currency, the central bank has to recognize it. But is that possible? How can you make sure that doesn't disrupt monetary tools? What are some of the, I suppose, lessons from other central banks, if any?
Yeah, I don't think that, I think that there's room for all of these things to exist. I don't think that like crypto is going to eat fiat currencies or central banks, absolutely anytime soon. I think what crypto has really done is it's sort of given this supranational option and choice for citizens and just people that like who want to avail of it. I think crypto as a currency, frankly, is just one of the use cases of blockchain and cryptocurrency or crypto assets. I think even if cryptocurrency doesn't materialize in some kind of grand fashion, I don't think that's like the worst thing, to be honest. I think for the last 10 years, that's all we talked about. And I think that's why maybe we're kind of over-indexed on it. But even like, Bitcoin, to be honest, like where it's headed, it's going towards the direction of digital gold, which is a commodity. I don't think it's really kind of headed in a currency direction. I think Ethereum, maybe sort of, and others might be going sort of at a currency for their protocols. But again, goods and services, like they're kind of priced in their like local currencies, and that's what you have to buy at the end of the day. And I think until we see some kind of wholesale shift onto kind of native units, I don't think that the currency thing is really coming. I think the CBDC thing, frankly, again, this is a technology. Different stakeholders will use it and apply it for their policies and their objectives. And that's what CBDCs are. And I think it's an existential threat to e-money because, like your Venmos and your GoPays and OVOs and all that, they kind of become defunct in that scenario, because then it's just a central bank that's issuing the whole thing, and it's digital, and they're tracking it like from step one. So what do you need e-money for? But I think otherwise it's they're both going to coexist on some level.
Coming to this, because another question that Adil had that was interesting was, you did mention, for example, that crypto assets are valued sometimes more than their utility, right? It kind of their financial, like their stock prices run ahead of them. What are the mental models, or how should you value a crypto asset? If you have any thoughts on that, if there is some thinking on that already, or is it similar to how you would value kind of stocks?
No, so I'll just offer some very kind of high level thoughts on this. I think this is a very deep topic and a very excellent question, to be honest. I think that there's some crypto assets that we see that are now starting, the valuation models are starting to become much clearer. To be honest, like the TAM of Bitcoin as gold, like I do think that it's well on its way. And there's a reason why like the price of gold, for example, like hasn't gone up that much ever since kind of Bitcoin came into existence. I think for a lot of these layer one type, like, basic protocols, you have to think of them less as a company and more as a country. And that's why, like, it's sort of a crypto economy and sort of trying to think of it as what a native unit sort of looks like. That's why, like, I think it's very different to kind of, the valuation mechanics are very different for it. But I just haven't seen anything concrete that's like led anyone to kind of good outcomes by trying to apply those so far. I think DeFi is interesting because they are generating actual cash flows. And so they do lend themselves at an application level to something more like an akin to a stock where you can run dividend models off of it. But again, like even if you do that, like you'll see the premiums or like the multiples are just, they're like crazy high, like they're sort of in kind of growth stock territory and then some. So different use cases, different assets, different lines of thinking. But this is my hope for the crypto economy as well, that we stop sort of treating it as a monolith, right? Because it's just a fundamental technology and you can take it in any direction that you want. And so I'm hoping that our financial modeling and understanding of it will become more sophisticated over time as well.
Well, thank you, Hassan. We're totally almost out of time. And I know there are more questions, guys, so I'm sorry we couldn't get to that. But this was a fascinating discussion. Your thoughtfulness and grip over the subject is so impressive. And clearly, it's been a pleasure to be with one of the leaders in the crypto space, not only the Pakistani diaspora, but in the world. So thank you so much for your time today. And thank you so much to everyone who was able to attend. Any last thoughts, Hassan?
Yes, no, thank you. Thank you for hosting it. I hope this was helpful. I guess the two things I just wanted to convey quickly are, if you want to get a hold of me, I'm on Twitter at Hassan_NY. Happy to chat, real time if you're thinking about crypto projects as well. And then the second thing is, I still have this kind of deep conviction that anyone that wants to build in crypto and Web3 over the next 10 years, if you can make that commitment, the kind of monetary reward that you can gain as a result of it, I think is the unparalleled anywhere else right now. And it's permissionless, so you don't even have to wait for anyone. So do think seriously about it. Think beyond the hype and the speculation, because anyone that has a long-term time horizon, which is very scarce in crypto, and anyone that has a builder mentality is going to make it.
Fantastic. I'm seeing all these comments. What an amazing session it was with you, Hassan. Thank you. Thank you, Pak Launch, as always, for bringing us Pakistanis all over the world together. Thank you, guys. Take care. Bye.
Thank you. Thank you all. Cheers.